What's good, guys? Bobman speaking here. We're back today with another trading video. So in today's video, you're gonna see me recapping for you a trade that I took earlier today in gold. And today you're gonna work away this video with a more confidence to my strategy and knowing more in depth of what I base on and all the key confluences that I base on to take my trades. So without wasting time, I would first of all want to thank all those guys that have been showing appreciation to my videos. If you have liked my videos, watched my videos till the end, and also subscribed to my channel, you mean a lot to me. So this channel has been growing consistently, and I thank you guys for making this happen. And for more information, keep on liking my videos to stay updated with more trades that I will be getting to you. So if you haven't subscribed yet, subscribe to my channel so you won't miss some major videos as we work in depth into my strategy. Also, you learn from me. Thank you. So today's video, we're gonna be recapping trade that I took on gold earlier today on 19th of May. So first of all, we're gonna start with a higher time frame basis. You can see gold has been in a downtrend since start of 6th May. As you can see, gold has been making lower lows and lower highs, signifying a major downtrend. As you can see, this was a lower low right here. As you can also see, price reversed, went up, down again, making a lower low, lower high, lower low, lower high, and lower low. As you can see, this means that the market is in a downtrend right now, and as a trader, you don't want to trade against the trend. If you are reversing the trend, then you're gonna be facing some huge risks. But today, I did not reverse the trend. The reason I took a buy on gold is going to be explained. So as you can see, if you dive deeper into the 1 hour time frame, you can see that there has been a major shift. So gold was currently in a downtrend, making lower lows and lower highs, but as you can see at this level, this high was taken out. What does it mean if a high is taken out? This means that price has shifted structure and is going to move in the opposite direction, as I told you in the recent video. As you can see, price reversed and then took out this high, making a shift in structure, and then price would start going. So I identified this fault, and as you can see, price started making high low here, and this is when and I took my trade around here, and I'm going to show you how I recently saw this trade coming and took advantage of it. So first things first, on gold, I like to first of all mark up my resistance and support zones and diagonal resistance and support zones with trend lines. So first thing I do here, I'm gonna be on my trend lines. I'm gonna move on to the line chart for me to know key levels which I'm gonna be basing on for support and resistance. As you can see, this was a key level right here. So this level before, so I underlined it, I marked it up with this line for me to know this was a key level. So if price would reverse back to this level, I would be tempted to take a trade, obviously. This was another key level. You can see how many times these levels that I call key levels are being tested, so that you can base on in your analysis. The zone that has been being touched on numerous times shows that this is a key level that is strong, and buyers or sellers like to react to these levels. As you can see, there was another level that I marked up. So let's get back to the candlestick pattern chart. So upon seeing this, that it was changing shift and structure, I begin to identify my reasonable market situations for me to take a buy or a sell. So as you can see, when I walk through what I saw when the market opened. So before the market opened, I was seeing that price had reacted to this diagonal support, which was a trend line here, and then took out this high in the lower time frame, reversed, made another swing low. So this signified that the market was under an uptrend. So I marked this up with another key trend line here that I would know what I'm looking for. And you can see, try to link up these two touches into one line or trend line. Then also on this diagonal resistance up here. So you can see price quickly reacted to this level right here. This was a key level here. So as I told you before in this videos that I was with up in the USD/JPY trade, key level is not just a line, it's like a range of pips. So this was a range of pips. This range is where sellers, huge sellers, entered into this market and tried to bring the market down to a key level of support and resistance for more buyers to step into the market. So as you can see, I marked up another key level right here. This was another key level that I marked up. So I was waiting for price to react to one of these key levels and show me my entry signal that I will base on taking my buy. And as you can see, price quickly came into these levels, so made some sort of a tweezer bottom here, but I was not tempted to enter this trade because I knew that this was not one of my trading setups. But if you could have taken this trade right here, this tweezer bottom, this is what would have happened. So many traders take different kind of candlestick patterns, but I mainly prefer to use the morning star, the bullish engulfing pattern, and huge sellers are taking place, entering the market. And as you can see, if you would have taken this trade right here, you would have quickly went to your stop loss. So this is the reason why I prefer to use the morning star and the bullish engulfing candlestick patterns, because these show more confluences that big buyers, these hedge funds, the banks are entering into this market. As you can see, if you know how to read price action, this was a key level right here, and as you can see, sellers were taken out at this level. So this long wick shows rejection. So huge buyers entered into this zone and then pushed sellers to the upside again. This is why this wick is forming, showing that huge buyers have entered. So I needed more confluence, some sort of a bullish engulfing candle to show me that buyers. As you can see, this next candle also had some rejections. As you can see, I did not enter at this part of this candle. If I would have entered, I would have a great drawdown and I would have easily went in panic. So I needed more confluence, bigger confluence to show me that buyers have placed are now in charge of the market and have made big orders. As a trader, you have to, based on what the market is telling you, you don't have to make random setups or random entries. You have to trade by how you're seeing the market. So okay, as you can see, I replayed price faster right now. As you can see, there was a formation of some sort of a bullish engulfing, but also can be considered as a morning star. Let me highlight this for you. You can see here, there was this huge selling candle which rejected this level, and this also smaller candle that rejected this level with a wick. These 2 weeks shows that sellers are losing power, and this bullish candle clearly shows that buyers are now stepped in at this level. So as you can see, this is my entry confirmation. If you don't know how to read price action, please comment into the comment section. If I get more comments about price action, I will definitely make one price action video for you so that you can read price action as I normally do. So you can proceed. This level, there was 3 confluences for me to take this trade. First of all, this diagonal support and resistance. This diagonal support right here also colliding with this key level of support also. As you can see, there was multiple touches on this key level. As you can see here, price had touched this level and went to the upside. So upon seeing this huge move that this level has caused, I subjected that there would be more buyers entering at this key level. And if you scroll back into history, you will find that this key level has been touched multiple times. Let's get back to the time. So, as I close this bullish engulfing candle, I quickly waited for it. First of all, I waited for it to close so that I can know if this candle is gonna close bullish or it's gonna weak. If it would weak, I will not take my position right there. I would wait for more confluences. But I saw that it closed bullish and I said that I'm going to take my buy from here. So I opened positions here, and then I placed all my stops at the break of this previous candle, right? So making my stop loss not too big, making it slightly small, and then for my take profit, I targeted this level for a 3.21 risk to reward ratio. The reason I targeted this level is because I personally don't like to take profit at the tops, because sometimes the tops are not reached and this may cause kind of panics and closing all orders at once. So to avoid that as a blunt trader, because I have not been an expert in this yet, so I'm still trying to figure out more, for the sake of my emotions, my trading emotions, I just place my take profit slightly under the tops of the levels that I'm looking for. At this, you would target this swing high, but for me, I like to place my take profit slightly under this swing high. So let me play price for you, see how the trade play out. As you can see, after this candle closure, price quickly started going up. There was a kind of consolidation right here, but it was minor because it was a consolidation on smaller time frames. As you can see, price started ascending to the upside. So as you can see right now here, this was a key significance. This is why I fell in love with this pattern, the morning star and the bullish engulfing. They clearly show that big buyers have stepped into the market. As you can see, the market straight headed up and actually hit my take profit in no time. As you can see, this trade was opened at 23:30 UTC -5 and closed at 4. So it was a couple of minutes, not even one full hour. You can see this was a fast trade. I clearly secured 3.21R just by making this easy setup, and as you can see, it was a green day in just less minutes, and you could proceed with your normal day-to-day activities. So if you would like to hold this trade, you can see price rejected from this zone and then retested this but broke under. So this is the key reason why I do not like to place my targets at the tops, because sometimes they're not reached and rejections happen at a slightly smaller pip range under these tops. So if you would be targeting these tops, you would like use some partial closes at key levels like this level right here, this swing high. You could have taken some partial profits and also take some other partial profits as the trade is playing along. If you are a trader like me who likes full take profit, you wouldn't like to place your take profits so high now. You could easily target a 3 risk to reward ratio, or you could place your TPs under slightly under stops or swing highs or key levels, right? So if you saw value in this video, please like, comment and share, and also subscribe to my channel for more depth in my strategy. As we keep on growing this channel, you will understand more and be one of the journey makers, I could say, one that I'm carrying along with my journey of trading. So thank you for the appreciation for the last videos, and as always I will be making more trade recaps, and I will also don't forget to comment if you would like me to share more about price action, reading price action. So peace out, Paul May signing out.